Hello and welcome to this channel where I talk about trading in the crypto market. I am going to show you guys how I enter these trades, what I look for before entering the trades, and most importantly, some of the rules that I never break. Okay, so hello and welcome back, and today we are going to be talking about the shorter or the lower time frames that may have an effect. So we did do a TA on the higher time frames, on the hourly and on the 4-hour chart, but today we are going to be looking at the 15-minute to see what looks like might be happening. So of course, in of itself, in the 1-hour chart, within that chart, we were looking for rejections, but from here, within that 1-hour chart, within those rejections, we can see both buys and sells, which is why from here, as you can see from price here, there's a supply zone here, here, and here. Then we can expect price to go up. But as we can see, based on this, we had a demand here, which can be actually shortened down here. Shortened down, or basically just resized to a point where it's a more strategic and accurate point of entry. So that right there is a nice demand zone to be looking at somewhere here. Let me just add that out for you. This here was a demand zone right here. So that you guys will sort of understand what I'm plotting out. And then of course from up here we were looking at sells in this big supply zone that we marked out on the bigger time frames. So based on that, we definitely should be looking at maybe the hopping into somewhere in this zone, right? It did have a slight tap into the rather bigger demand zone, but I'm definitely seeing this area to be more mitigated or tapped into. We will be looking at the other coins as well, so that you guys can have a sort of idea. On the bigger time frames, I agree how it may just literally look the same as BTC, but on the shorter time frames, I disagree. Mainly because they are a coin of their own, and on the shorter time frame, they have a whole different market compared to the bigger cap coins. So looking at ETH on the 15-minute, definitely very bullish. So okay, so we were looking for price to come up here to sell, so that's still an entry point. And then from there, maybe we can look at a little bounce in this area, which is going to be the demand zone here. Let's small that out a little bit. Right there. And then maybe a little bit of a price action on this area. Because we can also see that this right here might be forming a downward trend line if ever. So if price thus break out here, then we can look to sell here to one of these demand zones and then go up. Or of course the trend line does also start here, to be fair, if it breaks out somewhere here, which would be a bearish on the rather short-term time frame. From here, actually, we can see that based on these demands, we can come down here and then go up here. But I actually do want to show you guys the box method, which actually sadly has not yet been mitigated. So at the same time, this right here forms also another big demand zone, and the demand zone inside that, which is this one over here, that one is a more accurate and basically like shortened version for a more better entry point. So from there, maybe we can look at some longs to a 1.5 ratio as usual, somewhere there. Especially on the short term, I always like to follow my 1.5 ratio term or rule. It's definitely what I'm looking at for ETH. I don't see a much bigger option there. Seems to be just trading in the range also in this part here, as you guys can see. Right here, if you look closely. This here, this whole thing here, just ends up trading in a range. Like this here, boom, 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 boom. This right here is just a range trade, so we can just trading in a range right there. It's fun. Range. That's just a range right there. Expectation. Okay, so let's move on to Solana, and based on Solana, yeah, so whatever we've been looking at has not yet happened. As you can see, it's very weirdly trading in upwards trend. We did have a breakdown here, but definitely still looking like a little bullish trend there. These demand zones are very well still holding and important here. Just so you guys will know. Both of these ones right there. We can try to look at a higher time frame supply, but I don't think it will be helpful. So if ever, very high risk, but a possibility is a supply here. So this is something I would get in with a 1.5 ratio, maybe a slightly higher leverage, because this is going to be a risk trade. If you want to have some sort of reward, we're going to be looking at a maybe quick 1 or 2% gain with a high leverage, which could still be a big payout. So from here, if price does end up going up here, can be looking at one of these demand zones to be tapped and then the fly forward, because as we say and as we know, the bullish trend is still not over. Although there have been signs, as people say, that it is in fact about to come to an end. This right there is the trend line that if it does go past this here, we'll definitely be looking. See, from down here as well, just so you guys know, this was a huge trend line, which then got broken, which then triggered the possibility of it coming down. Although it did not, it is just continuing to trade in a range, which is not what we like to see, but we can definitely see some movements maybe going up into these areas sooner or later. Okay, so now moving on to ADA. Based on ADA, yeah, this is also just the same with Solana. It's big trend lines going up and big trend lines going up just like that. From here, as we can see, wait, this is not right, like that. And then as you can see, let me drag it out so you guys can see a little better. So from there, as you can see, price did break out. So now the fact that it broke out, maybe we look at some demand zones that can possibly be tapped somewhere there. Oh, this is a very tight one, but definitely something to look at. Of course, if we look at the bigger time frames, this here is one big one. So these two are some possibly entry points. So if you were, say, to enter a buy position, you would have a very tight stop loss with very minimal losses, because one of these two you're sure is gonna tap and bounce. And then maybe we can look at ones that are a little bit lower, very tight stop losses in these parts, because remember, we are trading in the range. So if we are trading in the range, it's very hard to predict, but a possibility to do so. So from here, maybe we can see price to go up here, price to go up down here. By the way, just a little tip, which I actually don't show much in my videos, but I always do in the back of my mind. You have to always see in whatever time frame you are trading, the trend, because the trend is usually how people ride the trades. And when you ride the trade, that's what you want to do, because of course the chance of it breaking is a 1 in 5. So out of that 5, 4 times, let's say price is trading in the same trend, let's say a bullish trend, Let me show you guys here. Let's say this is a bullish trend 1, 2, 3, 4, 5, 6. Okay, let's just say something like that. Alright, this is just an example, remember. So let me just mark it out so you guys know. Right here, this is gonna be 6-point bullish trend, right? 6-point bullish trend right there. And then out of that 6-point, then you will see one major breakout. So let's say you see in the first, okay, 1, 2, 3, okay, shit, that's already a bullish trend. So from that on, when you look at the next down low, even if it's not the ultimate low, but you add in positions to the point where it breaks out. With, of course, minimal stop losses. So it does, in fact, break out from here. There's a third run. If it breaks out here, that's when you start printing. You're printing. Of course, be safe and do not get greedy. You exit your position. And then let's say you enter again, but then you lose. But then you won't lose as much. The only reason is because your stop losses are very minimal and you follow a certain bias to a point where you're always profitable. That's something I always do in the back of my mind, just so you guys know. Then from here, definitely, I just want to mark out some box trading methods. It's actually not necessarily a trading method, but more a confirmation of trades. So it's something I use so that I can confirm on my trades. Like some people use the Wyckoff method, which is basically also a trend line. So I can get more into Wyckoff if you guys would like to know more about it. It's not something I use just because of how technical it is and how straight to the point and minimal it is, but it's not my style of trading. I prefer using the box method. So there's a box method confirmation. Yeah, so from there, we're definitely going to be looking at a price breakout somewhere on these parts. It did come back to test, but then it broke up. So now that's another sign of a huge bullish market. As you can see here, price broke out there. Price went down. It came back to test inside, trading in a range, and broke out here. You can see this is the point of breakout right there. This there is the point of breakout right there. It broke out, and then this, if it breaks out, that means, let's say this is a bearish trend, right? Let's just say this was a bearish trend. Down here, bearish, because it broke out the box and then it went back in. And it broke out, that means it's bullish now. So now that you know it's bullish, it's a more stronger opinion on the fact you should ride the bullish trend. At that point in time, you should already be in a buy position to keep adding your positions to the point where you ride it up. Then of course, once it breaks structure, very tight stop loss, and then you're out. That's how a little, step-by-step process on how I do my trades, just so you guys would know. But always keep in mind, this is not financial advice, and I will be ending the video here today. I hope you guys enjoyed.